Hey everybody, it's Lawrence from FinancialThing.com. It is Tuesday evening over in the UK, Tuesday afternoon in the USA, and we have a special guest this evening. We're doing a cryptocurrency-based stream because, that's what we do on Tuesdays. We have something that I've been looking into recently, which is Solana, which is a cryptocurrency, and how to stake it and get rewards in it. It's a bit of a unclear method of how you can take your cryptocurrency. There's a lot of confusing information. I don't think a lot of people really understand how crypto staking works. So what I've done is found somebody who can come on and kind of explain exactly how you could take a cryptocurrency coin like Solana, which is what we're going to focus on tonight. And as you know, I've staked some of my own Solana, actually even with this company. And we're going to kind of demystify everything about Solana from one of the validators and one of the staking companies themselves. And Ben is going to be joining us in just a couple of minutes. He's going to explain everything to us. Hopefully we can kind of demystify that. So super excited about that. And it's very, very different. Something that was quite random that happened for me to be put in touch with Ben, which is cool. So Ben is with a company called Cogent. And Cogent is one of the staking companies on stakeview.app, which is listed where you can receive an APR percentage. It's not as complicated as you might think to get set up. It sounds like something your average person wouldn't be able to do, but believe me, I'm that average person. I'm a very average person. And I was definitely able to figure it out. And I know with this live stream today, you are going to be able to figure it out too, if that's something you choose. And believe me, it's not for everyone. Crypto is not for everybody. We always say that. There is risk involved. But we're going to talk about the risk that is involved with Solana and staking. But quick hello to everybody in the stream. Don't forget, on Thursday, we're going to have Jatin. I'm not even going to try to pronounce his last name because I will butcher it. But he is from Cogent. He's the CEO of Cogent Property Partners based in London. So we'll be streaming a Q&A with him live at 7:30 UK time, 2:30 p.m. US Eastern time. So don't miss that. It's going to be a great stream. A lot of you have been asking for me to get Jatin from Cogent on. So after many months of trying, that is finally happening. So Thursday evening, this Thursday, that is what, the 10th? 2 days from now. So quick hi to everybody in the stream. We got Paul in Kenilworth, Dave Dawson in Staffordshire, Paul in sunny Stockport, Film Narco is here. Hi to you. John Morgan in Swindon, Naki Trap in Accrington, Arthur Atchison, Vlad Petrov is here in Illinois. So a bunch of people watching. Anybody watching in the future, I hope you enjoy this. Hit the thumbs up, leave a comment, subscribe to the channel, all that good stuff. So without further ado, let me bring, there we go, Mr. Ben is here. Say hi, Ben. Thank you for joining us, Ben.
Hey, Lawrence. Great to be on.
Thank you. Yeah, absolutely. Pleasure to have you. And everybody in the stream, you can just let me know if you can hear Ben okay. If the audio is okay, just give me a thumbs up or a yes. He sounds great. Ben, so Ben is do I call you the owner? Are you a sole owner of Cogent Crypto?
Yeah, I'm the sole owner. I work with a couple friends of mine, kind of getting through some of the community engagement. But yeah, it's mostly me.
Okay. So Ben is the owner of Cogent, and I'm going to show you real quick. Let me share this screen of exactly how I came to find Cogent. So this is a website called stakeview.app, and it shows all the current staking companies where you can stake your Solana and the APR. These are annual interest rates that you can achieve estimated. Usually they change a little bit day to day depending on what's going on with the market. But you can see Cogent is listed here at number 4, which I think is a good thing. Is if you can get higher on the ranking, I'm sure that's better for your business. And that is how I find them. And this is Cogent's website. If you want to check them out, it's cogentcrypto.io. This is not any type of a paid thing. This is just something, like I said, I stake my own Solana through Cogent. Ben and I have never met before. As far as prior to a couple of days ago, this is not a paid advertisement. This is more information, fact finding, because I find it absolutely fascinating what is going on. So let's kind of dive into it. We're going to do some questions. If you have any questions, pop them in the comments. We'll ask Ben at the end, and he can kind of demystify anything that you may be trying to get your head around. So Ben, you're a young guy. How old are you?
I am 30 years old.
He's a 30-year-old tech guy, and give me a little bit of a brief background on your career prior to getting involved with Cogent and crypto, because I know you're a kind of a newcomer to the crypto
Yeah.
market. You're not,
Yeah,
yeah. So tell me about you.
of course, yeah. So very new to the crypto space, at least as of last year, but not so new to the tech space. So I have been doing professional software development now for about 13 years. Started with a startup where we built a leasing and subleasing app for college students. Ended up selling that, and sort of that main focus was from a machine learning algorithm that we wrote that could kind of determine from a call if it was likely to lead to a lease or not. From there, just had a pretty traditional tech career. Did some work in the banking industry with a company called USA. Did machine learning there. A lot of kind of recommendations for like if when someone's typing in their chatbot, as well as being able to do like natural language queries, kind of like tell me all my transactions under $50 from last month, and being able to turn that into kind of the actual search that the person required. So from there, spent some time in the security space and with a company called DigiCert, and then moved over to a new company or a different company called Workday, where I lead up an organization that's focused purely on machine learning. But from there, like my sort of as a side interest, I got into Solana not too long ago, and then just really wanted to understand it deeply, have a forcing function to understand it deeply. And so, what better way than just to run the network itself? So,
Hmm.
read up on how to be a validator, realized, yeah, it's going to be expensive and a bit of a business risk,
Hmm.
but that's what business is about. I'm no stranger to starting my own companies. And yeah, so that's really sort of the brief intro. Could always talk forever about any one
Yeah.
of the endeavors, but
Let
yeah.
and for anybody that's not that's watching out that doesn't even know what Solana is, give us a brief description of what exactly, because I'm sure a lot of people know about Bitcoin. It's all over the
Yeah.
news. What is Solana exactly?
So I think Solana, a good way to think about Solana is, well, it's critical difference, which I think is really the proof of history, or sorry, proof of work versus proof of stake. We can always dive further into that, but at a high level, instead of securing the network by doing something really hard, you secure the network by making getting votes difficult. And votes in this situation is stake. Is kind of what we're talking about, staking. So the thing is, for someone to either shut down the network, they would have to have 33% of the voting power across the network, or AKA stake. So in a proof of stake network like Solana, that voting power is represented by the actual economic coin itself. In this situation, Sol.
Hmm.
And what that does is right now, let's say with a market cap of $28 billion, if I wanted to stop and halt the Solana network, I would have to accumulate 33% of the overall stake and vote either not vote or vote in a way that doesn't form consensus, and one could bring down the network. But it takes another 33% to change the ledger, right? To actually change the network. So I would have to spend $20 billion to acquire enough stake. And even that of itself is its own, like, that's the current price, but just buying it increases the price. Not very realistic, but that's what it would take to kind of overtake the network. So it's dependent on the difficulty of acquiring the stake as opposed to the difficulty of running the software. So in Bitcoin, I'm sure everyone's heard, you have Bitcoin mining, or basically you're computing hashes with high-powered GPUs typically. I mean, I guess with Bitcoin we're probably using ASICs, but either way, it's basically turning electricity into computing power, which is then sort of separated across the world and spread out. That's where you get this decentralization, but that just cost real money. So they use real money spent versus real money delegated. And I think that's the core difference in like say proof of stake, proof of work. And then let's take it one step further, because that, I mean, Ethereum's moving to proof of stake, or it's trying its best. We're still waiting to find out if that's actually going to happen. But the difference between, let's say, Solana proof of stake network versus the many others is Solana is built from a performance first perspective. It utilizes something called proof of history to be able to sort of reorganize transactions. So it still is a proof of stake network. Proof of history is, I don't want to say it's a misnomer, but it is definitely a little misleading. Someone might think it's a different consensus algorithm, but what it is, it's a way to sort transactions to know which order that they actually happened in and be able to verify that order. Critically, verification matters. So someone can't just make up that this transaction happened for other transaction. You have to have something, proof of history, to show that something happened after something else. And that allows basically the limits to be computing. The actual limit to how many transactions per second is now much more of a Moore's law limitation than it is a well, than anything else really. So
Mm-hmm.
that's where you'll see super, super, super high performance, many times multiple orders of magnitude. Let's take like already in Solana, it's been about a year and a half since it's been active in on mainnet. We're 10 times more transactions than all Ethereum transactions across its entire multi-year history.
Mm-hmm. Yeah, I'm just actually showing the website right now, Solana, and right now it's 2,416 transactions per second with a total of, I think this is 61 billion transactions, maybe.
Transactions, yeah.
Yeah, and an average cost of 0.00025 cents per transaction. So very, very cheap. Now, Solana is one of those coins that has a real use case to where people are using Solana to actually more of like a transactional process coin. Is that right?
Mm-hmm. Yeah.
Could you consider it more like a, I don't want to use the word Visa card, a Visa
But
transaction, but something similar?
that's actually an excellent thing to bring up, right? So like Visa can processes about 40 to 50,000 transactions per second. That's globally, right? Like so Ethereum, we're talking 13 transactions per second. It just could not handle even a tiny fraction of just the needed basic, like I want to buy that piece of gum. That's where Solana comes in. That's the goal of Solana, is be able to handle global scale finance. And that's what's needed, right, to actually be able to do efficient transfer of value. It needs to be cheap, it needs to be quick, and it needs to have high bandwidth, and that's what you get with Solana.
Mm-hmm. Yeah, and so I think one of the other things too we point out about Solana. So if we're looking at coin market cap, Bitcoin is the, let's see, the biggest coin in the world at 738 billion market cap, but Solana is number 9, so it's 26 billion. So it's a pretty large coin. It's considered one of the big cap coins. But one thing you told me about that I thought was very interesting is you are more interested in the technology side of what is coming for the future, which we necessarily don't know what that is right now. But a lot of people invest in cryptocurrencies for the get rich quick
Hmm.
side of things. And because you're relatively new to crypto, I think you said you came in maybe a year ago or a year and a half
Yeah.
ago. You don't come from that side of things. You're not a cowboy investor. You're somebody that is very interested in the technology, which is why you became a staking company. But let me just back up a little bit. Tell
Sure.
me how you got into Solana, because I thought that was pretty interesting.
Yeah, so how I got into Solana, I actually was really good friends, worked with him at Workday, kind of my current job, with somebody who was from LedgerX, a company that ultimately got bought by FTX US. And he'd been in the space forever. I always kind of got my crypto knowledge from him. Never really wanted to jump in. It's Bitcoin was interesting, Ethereum was interesting, and I loved reading about it, but I didn't see how they were going to transform the world in a way where grandma could might be affected by it. I was like, well, this just doesn't scale. It's interesting, and I kept a close watch on everything that's happening. But I wasn't ready to invest. It didn't make sense to me from like, this is something that I would like to build in. Um, and then, yeah, about, let's say like in last summer, I just say around the July time, it's just like, hey, like this is a network that's different than anything that's come before, right? Like we're talking possibility of 50,000 transactions per second right now, but I was like, okay, well, what's the bottleneck? How do we get to 500,000? How do we get to a million? And the nice thing is, he was able to inform me that it does scale with hardware, right? So I was like, all right, well, that's interesting. So I put in a good chunk then, and over the next 4 or 5 months, if anyone else has been following, we 10x'd from when I bought it, and that really, I mean, just how is it not? That perked me up. Like, okay, like what is actually driving this? What is the actual technology? Because I was only aware of the numbers, but not the actual underlying how it works. So that's when I really in November and towards the very beginning December was like started reading up how it works, started reading the Rust source code. Although I think that's not the way most people would go about it, but it's just utilizing my own skill sets in software development. I want to go like, well, what is it? What is it actually? Like, what is the actual code? And I was blown away. I was blown away how well what in the Rust code was, and it's like, man, I want to get involved. I want to be part of this. So after the CEO, or sorry, the CTO of FTX US had made that intro, I just jumped in. So I've been in it ever since really last December.
Okay. And so before you started actually becoming a staking, do they call you a staking validator? Is that the
Just a
worst way?
validator. I would say just became a
Just
validator.
validator. Before you became a validator, you owned the Solana prior to that, correct?
Mm-hmm.
Okay. So how long did it take you, and what made you transition from just becoming somebody that bought Solana cryptocurrency to an actual validator? How long was that road for you?
So 6 months from when I owned a significant amount of Solana to where I wanted to run the network. But it was about 2 weeks, maybe less, from when I read the source code, when I understood how it works, to when I realized, oh, I want to be a part of running that network. After reading that code, after seeing how their software development was done, on Discord, how they communicated about it, I wanted it immediately. So like, that from the actual open eyes understanding of it, it was 2 weeks.
Okay. And so the way that I found you was again through this Staking View app. And I was just looking through the top. I mean, there's hundreds of staking,
1,500 specifically.
1,500 validators. So I was a little bit confused. I'm like, well, how do you pick the right one? And so I had some questions about that. And actually was reading a Reddit forum about how that entirely works. And it's actually not that difficult to understand. But what I want to ask you is, what does it take as far as how much Solana do you need to hold yourself as a validator to become somebody that can stake or offer staking?
Yeah. So I think that's kind of a multi-part question, but I'll answer is like the absolute minimum you need to have a kind of a realistic shot to do well is 100. You need 100 Solana they call it self-stake. So kind of like, you have some buy-in to the actual network. And that is the threshold for the Solana Foundation program for getting stake, but it's also the threshold for many of the stake pools. We can talk about those later, but basically there are some companies that aggregate the stake kind of on behalf of people, and then they delegate that stake to many stakers, or sorry, many validators, me being one of them. And you're required to have 100 self-stake before they would even consider it, just to kind of have that buy-in. So right now that would be 8,800, I think $8,500 worth, roughly, of Solana needed to kind of get started.
And then I'm imagining if you start out at that type of small amount, it's very difficult to get traction. I would imagine it's kind of like when you're on Google as a website, you're at the equivalent of being on page 400. Where in order to grow this staking validation company, you would need to, get noticed on a company or on a website like stakeview.app where you appear at the top. But in order to do that, you have to have quite a large staking amount, correct?
Well, so interestingly, that's actually just a merit-based app, right? There isn't any sort of community engagement or kind of popularity. It is purely a performance report. So actually for stakeview.app, for not everyone uses it, but for the folks that do, they don't know, they don't see how long someone's been doing that. You might want to consider that aspect,
Hmm.
but it just shows purely your performance. So, I mean, maybe at risk of jumping into further topics, the way that works, the way the ordering works on something like StakeView, which is ordered by your APY, what that means is basically how many vote credits that you got. So kind of going back to one of my earlier answers, we talked about delegation, and staking is about delegating your voting power, your Solana tokens, your SOL, its voting power. And then with those votes, I get a vote they're all valid. They all make sense. Nothing, illegal happened. No double spends. And I'm using my voting delegation power to say, yes, this is all good. We should put this in the ledger. And then when 66% of the stake across the whole network, across all validators, say it's a valid transaction, it
Hmm.
cannot be undone unless 66% again go back and say, no, that wasn't right. That's never happened, but that is built into the network kind of if something negative happens. But really the point is the amount of APY, going back to your APY question, kind of what ranks that ordering, it is a function of how many times I've successfully voted on a block that got the 66% of the votes or more.
Hmm. So it's almost showing that you're a legitimate source of staking. That's
Yeah,
the way.
and that just is direct performance. So there's many ways which you can change that performance. So for me, we take a lot of time to make sure we're not bottlenecked, right? It's just like because Solana is so fast, the way to get more vote credits is make sure you have a fast enough CPU. Make sure you're not IO bound bottleneck. So like one heavy IO process, which is just keeping track of the actual ledger, that goes on its own hard drive, and then the
Hmm.
logs go on their own hard drive, and then and then I actually keep a big chunk of the like basically the accounts themselves, which get debited or added to across these transactions. I keep the record of those counts fully in RAM. So I actually use what's called a RAM disk, where the operating system, it looks like a hard drive, but in reality it's running directly on the RAM, so it can read and write ultra fast.
Hmm.
And so it's about kind of using your programming knowledge to understand where bottlenecks are and removing those and getting more vote credits and helping your stakers out.
Okay.
Because the more times I vote successfully, the more money everybody that stakes with me gets.
Right, and I think this is one of the problems with cryptocurrency right now is in layman terms, it can be quite hard to get your head around how you as a company could pay somebody interest
Oh yeah.
in the form of staking their coins. But just to break it down in very simple terms, if I hold a cryptocurrency like Solana, let's say I have 10 coins, which would be worth about $800, I can go ahead and stake it with a company like Cogent or one of the other companies that I decide to do it with. And then all I do is I get an APR percentage back uh, during the year. So it gets paid they call it an epoch, EPOCH, which is every approximately couple of days. I get a piece of that APR back and I get it paid in Solana coins. So if we're getting a little confusing as far as the terms and how this whole thing works, uh, obviously Ben and Cogent is not a bank. And one of the most important things to understand is he does not, and Cogent does not have any control over your coins. This is all
Correct.
written in the blockchain, as far as I understand.
Yep.
And there is no way that Cogent could take your coins, steal them, sell them, or anything like that. So he's really just a facilitator, almost like an accounting company to pay you the APR percent. Now, I wanted to ask you, Ben, how much is actually being staked right now through Cogent?
Right now, so we have 192,968 sole staked or votes delegated to our validator.
Okay, so that's 190 something thousand Solana coins, or
Correct. That's exactly it. So if we want to get to the dollar amount, I think if it's if we say estimated about 80 right now for Solana, that's about $15 million.
$15 million. Okay, so as bigger as Cogent becomes, the idea is the more is staked through Cogent. And then one of the interesting things about this validator process is you don't want any company to have too much staked in one place, because then you start to get into this question of, can they change the way things are voted because they have too much voting control, right? So, but you're not there yet.
No. No.
So what Cogent is doing, and again, this is from my own questions when I first started, is like, how the hell are you able to pay me interest like a bank, right? You're not a bank. Let's get this very clear. There are obviously risk involved with any crypto, but you're able to pay an APR interest to me as a Solana staker. Just explain in very layman's terms how that works, as far as you put it in a wallet like Phantom, you stake it to Cogent, and then you account for the interest that I'm paid back, right?
Correct. So I think the best way to think about it, or I guess here, the way it works right now is Solana has, and most proof of stake networks have inflation built in. Specifically for Solana, it started with an 8% inflation rate with a 15% decrease each year to kind of some target stake inflation rate. I think it's 1.5, and that happens over 10 years, as decreases by 15% each time. So it starts, year one, it's 8%. Year two, it's 8% times 0.85, which ends up being around like 7.2, I believe. So how that works? So anyway, that inflation schedule is just part of the blockchain itself. And the way my stakers, or any stakers from any on any validator, get their rewards is at the beginning of every epoch, or the end of the previous one, however you want to think about it. At the boundary, the coins are minted. They're minted by the system program, the actual Solana network itself, and then they are given out to all stakers, and only stakers specifically, right? Only delegated stake. So the less people to stake, the more returns everybody gets. Because that inflation's constant, but the amount of stake at any one time is not constant. And so that pool of money gets spread out across all the validators, across everybody who's staking. And the way it's doled out is kind of, as I mentioned before, is those vote credits. They're looking at how many votes successfully landed for every validator, and that's the size of the pie that they get from that inflation amount. And that inflation amount is there for two reasons. A is to drive the proof of stake. That is to drive a reward system, a reason, an incentivization for someone like you to provide their voting power, right? Provide their economic sort of voting ticket to keep the network running. It decreases over time because as the network matures, as the price of Solana increase, not every single bit of Solana needs to be staked to keep the network secure, but it needs to be where it would be very difficult for any single entity to take a controlling share. And that's sort of the balance. Like when people talk about tokenomics, and that may not be a new term, but just think about incentivizations with tokens. That's one of the most important things to consider when you're looking at any network. What's their inflation? What's the reward systems? How long can it last? Is it sustainable? And is it a reasonable model? But even with that, right now, that 7.2% inflation rate, that is enough incentive. It certainly was for me, for me to lock up some of my portion of my soul to help run the network, help decentralize it.
Yeah, for anyone again listening, Sol, it was a term we use for Solana. It's kind of like a crypto insider word. Sometimes we say BTC for Bitcoin. Sol is the actual Solana coin. I wanted to ask you, Ben, so if one were to look at a list of Solana staking companies, and we have this 1,500 right here. So I'm just looking at stakeview.app right now. I see this Leapfrog Systems at number one. It pays 7.15% a year, and then you're sitting at number 4, 6.68. And we have all these different companies, some with bigger stakes than others. What makes one validator different from another? Like, why would somebody choose number 25 on the list versus number one on the list?
Yeah, I think that's an excellent question. A lot of it has to do with, are you bought, like, decentralization, right? Like, so you there's a lot of times there's a small difference between the different validators, and sort of spreading your stake out, or spreading, the voting power out, prevents from one person from controlling the network, right? Like, and that's kind of what all of this decentralization means, is you don't have one entity. And so a lot of people choose based on not just the absolute end APY, but also what data center are they in? Are they, are they with, like, let's say Amazon.com went down tomorrow. Would Solana go down with it? Well, absolutely not, because there aren't that many validators on Amazon, because many of these, what do you call it? Many of these ranking applications. So StakeView, StakeWiz.com is another really good one in my opinion, and Validators.app. They kind of compute a score, and kind of rank validators on not just on APY, but on decentralization aspects. So, like, I think I remember I saying we have the data centers, but also the cities. Imagine a big earthquake or a big power outage, like the one we had in Texas last year, where the power was out for up to a week. If you have too much stake centralized in one area, that's a pretty big penalty. So both, well, yeah, a lot of these ranking applications will take into account other decentralization amounts. So, and also just total stake. Like, it's, if you look at number one, Shinobi Systems, they're an excellent validator, great part of the community, but they have 5 million stakes. So they represent what people will call the super minority, the top group of validators that, if they all colluded, could theoretically stop the network. And so some people don't want to put their money in with that top group, because they're basically further centralizing the actual network itself, further putting the voting power into a more and more concentrated area. So they might choose somebody lower down the list as well.
And they also charge commissions too. That's another thing for people to watch out for. For instance, the Shinobi Systems charges a 2% commission, so you're not actually going to get that 7.07 right percent. You're going to get that less 2% a year. Is that correct?
Well, so for the most part, yes, but actually in that specific example, the way StakeView is written, it actually does take into account. So it is worthwhile, maybe, like, we could get into it later, but how can one perform so much better? Shinobi is the number one top performer, and that is with 2%, that 2% haircut that he takes. So he is up there in spite of the 2%. Not.
Wow.
Yeah, it actually is quite impressive.
Yeah, and they don't explain that either on that StakeView.app website, which is probably something they should do, because it's hard to understand. From a finance perspective, when I see a commission, I always think I have to take that off the returns. So that's interesting.
Interesting. Yeah, that actually, so that I know for sure, I know how that website was written, and that one is written that way. But that is something you do have to consider.
Okay. Let's talk about Marinade, because this is where I first stumbled upon Solana staking. So Marinade is kind of, I would say, one of the big boys when it comes to Solana staking. I know you personally stake some of your coins through Solana. So basically through Marinade. So basically the way that works is you put your Solana, stake it here with Marinade, and they pay you back in these things called MSOLs, and then you can take that MSOL and go ahead and restake that back to Marinade and get yourself an extra, I think it's, let's have a look and see what, the 1.09% on top of your staking amount, which is 6.11 today, so you could get 7%, or you could use it for DeFi and start even getting even more money. So you said you actually stake your own Solana through Marinade, as well as doing your own validation. What is the reason for that? Why do you use Marinade alongside what you're doing at Cogent?
Yeah, so do you want me to talk a little bit about how Marinade works, or just jump right into? So I think it's worth talking about. So like the way Marinade works, and I think you covered it pretty well. Just to go into a bit more detail, is when you do, let's say when you give them your soul, you get back the M soul like you mentioned, and they what they do is they actually take that soul, stake it with validators like myself and many others. So they spread it out to the top 300 by their scoring system, which does include decentralization metrics. So kind of the more decentralized you are, the more you would get staked as a validator by Marinade. So anyway, whenever you exchange your soul for MSOL, Marinade Finance takes your soul and delegates it to the top 300 validators. And when that happens, they get the rewards themselves instead of you. But what they do is they increase the price in which they will buy back that MSOL. So MSOL gets more valuable over time because Marinade will pay you more soul over time to take it back. So it's like an exchange system. The way I think of MSOL is more of a receipt. It's a receipt that you have put in soul that is getting value, and you get to take that back. But in this situation, that receipt becomes more valuable over time.
Okay.
So that's kind of like that. That's how how the finance part of that works. And where it becomes interesting to me, I do about half. So I do half native staking, and then I use the other half in DeFi. So basically, when you're validating with a staker, or when you're staking with a validator like myself, you actually lock up your soul. It takes 2 or 3 days to get your soul kind of back in where you can spend it. It always remains in your custody, like you mentioned earlier, Lawrence. But you can't use it right away. Say if you wanted to sell it, or say if you wanted to swap it out for something else, you have to wait for 2 or 3 days before you can get that. With MSOL, they'll take back the MSOL and swap it for SOL at any time, and you can just trade it directly on the open market back to SOL. So you at any point, that's why they refer to it as liquid staking. It allows you to kind of have a higher degree of liquidity.
Mm-hmm. Okay.
And
go ahead.
Okay. And the reason why I do half and half is because, exactly as you mentioned, in DeFi, I'm a huge finance person. I'm really interested in financial tools, lending and in collateral supplying. And so kind of what we do what I do with my MSOL is I use a platform called Solend to supply MSOL as collateral, and I borrow SOL and actually convert it back into MSOL and utilize lending platforms to sort of optimize those gains of that intrinsic value gain of MSOL over time.
Okay, so this whole DeFi thing is a whole different animal, because I was looking at some of the interest rates that some of these DeFi platforms are offering, and I've seen stuff 25, 30, 40%, which you have to understand. If anybody's watching out there and you're considering this, like here you can go on a company called Orca, and you can add liquidity to Orca and USDC and get today 49.2% APR, which is definitely risk. And we're going to talk a little bit too about the risk and what's in fact let's talk about that right now. This is going to be the number one question. What is the risk of staking, period?
Yeah, that's a really good question. I think that's an excellent place to start. So the risk of native staking. So and when I say native staking, I really just mean staking directly with a validator and providing your voting power. Mm-hmm. That has if we separate out the actual price risk of SOL, it has zero additional risk. There is no way for you to lose your SOL if you've delegated it. There is some risk on gains. So let's say if you go with a validator who is not good, who's not trustworthy, or just doesn't run it well, like let's say their validator goes down and they don't bother to bring it back up, you don't get those gains. So you've missed out. But it's not, you don't lose money, but you lose the gains, or you lose access to that that opportunity cost. Mm-hmm. So I think of that as a zero risk thing, which is why I keep about half of my SOL in a zero risk area, because let's just say everything shits the fan, the shit hits the fan and it goes wild. Well, I at least have my staked SOL safe, and I know it will remain safe. And then we're talking about MSOL staking. It's not risk free. I think the risk is low, but it's not impossible for Marinade to do what's called a rug pull. They could decide, that they want to keep the SOL for themselves, and they could make the IMSOL worthless, and they just have SOL that they could trade, back on an exchange or back anywhere, and run off with the money. Now, I think there's a lot of mitigations in place to not be so worried about. With Marinade specifically, they have what's called a multi-sig wallet, where many people all have to agree for any change to happen. And actually, they have independent third-party people from Serum and Alameda Research and other companies that would also have to agree. So that spreads out that rug pull risk, because not only would the company have to agree, hey, let's steal everyone's money, but an independent company would have to agree, and individuals within those. So you're taking on a little bit of that risk, but then there's additional risk of just what if the protocol's not written right? All of this money, it's programmable, right? These are all written in what are called smart contracts, or in Solana they're referred to as programs, but it's the same thing. And in these programs, these smart contracts, if they're not written properly, you might get, the money could be hacked. There's no guarantee that money would be replaced. There was a recent hack on a bridge protocol called Wormhole recently, where $300 million worth of Ethereum was stolen. Now, crazy enough, there's the company that owns that portal, that bridge company. They felt that the value that money provided, just being there as a tool, was more valuable to them than just having that money in their pocket. So they replaced it all. But that's not a guarantee ever. So you have to consider you are taking on what I would refer to as protocol risk. Now, a mitigation on that protocol risk are audits. They're not perfect, but an audited smart contract where a third-party company who's very familiar with the underlying technology goes through, reads every single line of code, and determines, does this code do what it's intended to do? Are there any security risks? Are we not only checking if the signatures are matching, but they belong to the right signing thing? It's basic stuff, but like, people make errors, and that's kind of the risk you're taking. I think the safest thing you can do, like if you believe in Solana, but you're still risk averse, like you're scared of the hacks, and you're worried, you're seeing all these things happen. The safest thing for you to do, but you believe in the underlying technology, is just to acquire SOL and stake it with a validator. That there's, at worst case, you don't gain as additional SOL as fast as you wanted. Let's say if the validator was terrible, so you picked wrong somehow, but you can't lose it. They can't take it. I could not take it, like you mentioned earlier. I have no control. All it does is allows me to vote with more sort of.
Yeah, absolutely. And Solana is a relatively new coin. If we look at Bitcoin going back into 2011, 2012, Ethereum comes later, but just looking at the price action chart on Solana, we released here on CoinMarketCap in April of 2020, and this coin was 77 cents, and it ballooned all the way up to $258, which is an amazing price action run. So one of the additional risks that everybody should definitely understand about, if you were to hold Solana and stake it, is just a simple price crash. If you bought it at $200, now it's sitting at 80. But staking is one of those things. If you were going to hold the coin anyways, it doesn't matter. If you believe in Solana or you believe in cryptocurrency X, staking is just a way to get additional returns in the form of getting more of the coin back, because you're getting paid in the coin. Just to understand, you're not getting paid your interest in pounds or dollars or euros. You're getting paid in the coin, which I like. So that's one of the additional risks that I think is really important for people who maybe don't understand much about crypto to know.
I think that's critical to call out, right? The price risk of any crypto, I think, is really high. Now, if you're looking at the 5 to 10 year time frame, for a cryptocurrency that has a good base that will that does live through that time, it's much lower risk. But let's say you might need to use that money in the next year, 2, even 3. There's a pretty reasonable chance that the price that you are looking at when you want to sell, it absolutely can and will at times be lower than when you bought it multiple years ago. But as that's like how Bitcoin worked, right? Like there was a time when it was worth $100 and it went all the way down to 20. That's that's an 80% loss. That's insane. And you're like, man, this is insane. I bought it at 100. Now it's 20. Like, what the heck have I been, have I got myself into? But on a larger time horizon, $100, at that peak is an incredible price to get it at.
Hmm.
And that's that's where, though, if you, knowing yourself, knowing how you react to big dips in your portfolio, can you stomach an 80% price decrease? And if the answer is no, and I think that's reasonable, then it's probably a bad idea to get into crypto, because those swings will happen. They're happening right now. And if that's going to be too much for you, it's probably just one of those things that it'd be better to not participate in. Not to discourage, but I think it's important to be realistic. This is all speculative. I'm speculating that the utility of Solana is worth much more than $32 billion. And I think even at 200, I do think that's a good price. At its current price, I think it's an incredible price. But I'm not convinced at all that it won't be down more than 6 months from later. It absolutely could be. But I do personally believe in that 3, 5, and 10-year time frame price, from a technology standpoint. I'm comfortable with big money drops. I'm in a very fortunate financial position to have, a significant money to invest in that I don't depend on my day to day. So I'm comfortable with that level of risk and volatility. But there's other people that might be forced to sell at the bottom, and that's just, if you know that could happen, I don't recommend it. It's really better to stay out.
Yeah, I think that's a great point, Ben. And something, if you're not in I think a 5 to 10 year time frame on this stuff, you probably shouldn't be entering it because of the volatility and especially what's going on with the global economy right now. That's a very important thing to understand. I know we've been going for about 50 minutes, so I definitely want to keep this at a decent amount of time, because it is fascinating. But I want to get a couple of other questions for you, and then we'll do, so if anybody has any comments, questions that they want answered. We're in the really early stages, I think, of cryptocurrency adoption technology-wise. I think we're going to see some amazing things happen. Give me a couple, maybe just one example of what you see real-world usage of something like, whether it's Solana or a different cryptocurrency in the future.
Yeah. I mean, to me, the most obvious one, having been an entrepreneur before and having retail sales, is payments. Right now, the process, let's say you take Visa, that process is when someone swipes their card, well, 2.5% immediately goes to Visa, right? And then from there, they also take an overhead charge, maybe 30 cents, depends. And that's before the money ever hits your account. But there's also the time value of money. The time when that money actually settles, and when you're able to access that as a merchant, can be up to 30 full days. So when you lose that inventory, you gain that credit, but you don't actually gain the dollar or the euro or the pound until that whole system sort of finalizes, right? You got your finality, and that can take up to a full month, just depending on sort of your agreements. And so you're out money momentarily, and you've paid a percentage. But with something like a public distributed network like Solana or other ones, you can take that payment, like with Solana, in as little as 400 milliseconds. And then not only that short time frame, that money is the transaction that you'd have to pay on that is a fraction of a penny, as you mentioned earlier, Lawrence. And then you can spend that money, you can use that money right away. And where that really matters is, like, imagine if you're a retail store that has inventory, being able to buy more inventory as soon as that inventory comes in is a big deal. And of course, there are programs that will sort of in traditional finance, there's ways for you to get that money earlier, but then you pay loans, right? Then you pay. It's just a bunch of middlemen, and that's why things take so long, because everyone gets to have their piece. Everyone wants to hold on to that money for a certain amount of time, be able to get interest on it. But with a distributed network, you just don't need that middleman layer. It's a direct transfer from me as an entity to the person I want to pay. And that, I think, is sort of the iPhone, kind of moment there. This is where it's actually worthwhile for people everyday usage to go.
Mm-hmm. Yeah, I love that explanation, Ben. I get asked this all the time because my viewership base is very much peer-to-peer lending, loan-based crediting and stuff like that. But I get this question. People think cryptocurrency is not a real asset because they can't touch it. It's not tangible. What would be your response to that?
I mean, I don't know. Has anyone ever touched their bank account? Like, so yeah, I mean, right? It's as real as anything else that we deal with over the internet. It's as real as a post. It's as real as the numbers in your account, and it's the value that people attribute it to. And then that can be uncomfortable as just a general simple concept. But when you break it down, that is how the world works. I mean, that is like, the US dollar is a digital currency by and large. It does have a physical component, so like that is, a difference. But for the most part, most transactions are happening. My electronic card goes into an electronic system, which changes some electronic numbers somewhere else. And it's just not a public ledger. This is just the same thing, but public and verifiable, as opposed to hidden and not verifiable.
Mm-hmm.
So I think that argument to me is not that interesting of a one. But it does make sense. It is something like, I don't knock anyone that has that viewpoint, but I do think it's a limited viewpoint. And if you actually go a little bit further and investigate, it's not that much different than the way we use money right now. It just feels different.
Okay. Do you own any other cryptocurrencies, or which ones would you go out on a limb and say you like, or you think have got a really bright future?
I do hold some BTC. I'm not as much as Solana. I do believe in the growth potential, but BTC. I hold a small amount of ETH in ETH2 format, so I stake a little bit of ETH2.
You got to tell people what those are, because they might not understand what BTC.
Yeah, fair enough. So Ethereum is in the process of of also trying to move to proof of stake versus proof of work. Proof of work being that very electrical intensity. Like the environmental issues that everyone concerned, that's oriented towards proof of work. So in Ethereum, they're moving to proof of stake, and so I have some Ethereum as staked, kind of in the Ethereum 2.0 network. Another proof. So most of almost all the value I have in crypto, besides that small amount of BTC, is in other proof of stake networks. So AVAX, or Avalanche, is another one I'm a big fan of. I think that they have a good job, have a good team. I'm not as stoked about how they will scale, but they're still significantly more. They have this idea of side chains, or kind of parallel networks. So even if the network gets congested, then it's possible to make additional networks and run things in parallel.
Okay. Yeah, go ahead.
Okay. And then the last one that I have is Polygon, or Matic.
Yes. The infamous Matic, that a lot of people say when it comes to gaming is going to be quite an important part of the gaming ecosystem through cryptocurrency.
Yeah, and it very well may. I believe it just from how I know the network work. I do think Solana is a better implementation of it, but a better technology doesn't always mean uptake. And a lot of the value is actually in the uptake. It's what people build on it. So I think it's the most promising technology. It's not. It may not win. I'm speculating that it'll win, but I don't know. So I've spread out some of my investments, at least aside from my time investments, in Cogent. I've spread out my monetary investments across multiple networks, because I don't know what'll win. I don't. I think people say that they do know. They're lying, or they don't. It's just not possible to know.
So for anybody that's older like I am, I used to have a Commodore 64 computer, and I had an Amstrad computer, and then there was a Sinclair computer in the very early days, and everybody thought these computers would be around forever, but they ended up being gobbled up by, IBM, and then Apple, Microsoft in the future, Dell, things like that. So we just don't know, because we're so early on into the cryptocurrency space that things may look very different in a year, 5 years from now than they do today. So this is what Ben is saying. He's diversifying and saying, this is what I think may be successful in the future, but there's obviously absolutely no guarantee when it comes to it. So and
you said May. I think almost certainly the landscape will be different a year from now, and I with just near certainty, 5 years from now, it'll just be fully different. I can't predict what that will be.
Absolutely. We'll do a little Q&A at the end, so just hang in there if you have questions. If you want to check out Cogent, again, one of the validators out there that I do stake through myself, you can go to cogentcrypto.io. I will leave a link in the description. In fact, it may already be there. I may have already put that there. I can't remember. But there is a 0% commission they're paying. Looks like 6.8% APR. Today they have, let me pull up the screen here, 192,968 Solana staked. And I'm going to do a tutorial on actually how to stake your Solana. It's actually very, very easy. You just get yourself a wallet, put the Solana in the wallet, and then you can stake through the wallet. So if you have a question on how to do that, just you can go to YouTube. There's tons of tutorials, but I'm going to record one too. Last question. Are you generally bullish on crypto in general for the future?
Yes. I mean, why would I be in this space if I wasn't? But yeah, I'm bullish specifically because I strongly believe that the economy, the way like that value is generated, is main bottleneck is the cost of a transaction. That's both time and just like the monetary cost. And where I get stoked, and I don't think this is part of sort of the common commentary on crypto, is I see that as a way to make the transfer value ultra efficient, and that means the rate of transactions are increased, and the rate of exchange of a value, and what's possible, especially from incentivizations, right? Like with these programs, you can create incentives that don't require trust. And we know, like, if you want to build a business, the first step is to build a brand, build an identity, and establish trust, right? And with crypto, you can, in certain circumstances, you can avoid that process. So you can provide value to someone without trusting that, okay, when you give them the money, they will give you, the whatever you're looking for in exchange. Within crypto, that can be encoded into even better than encoded into law, it can be encoded into code. And that makes that transfer happen immediately. Mm-hmm. Or, and clear without the doubt of, well, if I do this work, will I really get, the promised value? Mm-hmm. And that's why I'm so excited about what crypto is going to bring, is because we have an opportunity here to change the way humans exchange money. And I do think that's as fundamental. I mean, that's why that's where the written word came from. It's just writing down debts, and enabling trade. And so this, to me, is as big of a deal as when humans invented language, as big of a deal as when humans invented, money, really, right? And or the internet. It's not obvious right now that is that big of a deal, but I think like the same way the internet wasn't obviously a huge deal at first, right? I mean, it was just a way to send a message to someone down the hall. That's not that interesting. But what is interesting is I send a message to someone down the street and they come pick me up in their car. That is incredible. It takes a lot of building on top of it, but that's what crypto is going to enable. And when I mean that, I mean something we haven't even thought of or envisioned. Mm-hmm. Will be a norm for us, for you and I, like 5 or 10 years from now. And then like if we're talking about like kind of a full another generation, I mean, we couldn't even begin to predict what that'll look like. So I think it's going to change what people do, how they're incentivized, and how work actually happens. But that'll be over time, right? And it may not be Solana. It probably won't be Solana. Like what I'm describing is something that just hasn't even been invented yet, but we're laying the groundwork right now.
Yeah, I tell you what I find fascinating about just the internet in general is, if you can imagine before 30, 40 years ago, you couldn't buy a stock on the stock market without picking up the phone and calling a stockbroker, which really was a massive barrier of entry to most people because they were scared to do it and they didn't know how the system works. And now somebody can go on a website, buy Apple stock in literally a second. And it's just opened up this massive world of investment opportunities to people. Unfortunately, it's opened up a lot of scams too, and yes, other things that we won't get into that, but that's just part of what comes along with it. But if you want to get in touch with Cogent themselves, they have a Discord. I know we have a Discord channel, Financial Thing Discount, but you can go ahead and just go to Cogent's website and hop on the Discord if you have any questions. Ben is very active on there, so he's always been extremely nice to answer my questions. As when I was a complete beginner, I kept on reading the Discord and the Reddit, and he always responds very quickly. Are you okay to do a quick Q&A? Probably just a few questions, and I'll let you get on, because
Yeah,
I know you're in Colorado in the US. I know it's the middle of your workday, so
it is. Yes.
I'll go ahead and let's see what questions are out there, and then we will let you go on your way. This is from Mike Powell in Southampton in the UK. If the reward each stake company gets is dependent on their voting power, does it mean if you go with the bigger staking company, you get a higher return, and why would you not go with a bigger one?
Yeah, great question. So what happens is the more voting power that you have, the more credits, or sorry, like the more sort of inflation, that bigger slice of that inflation that you get. But then it's divided amongst the people that provided that stake. So what ends up happening is it's actually independent. The rewards are independent of how many people have staked, at least for like an individual amount of SOL. It is independent. So if I have more, more stake for my stakers have been created, but it's exactly proportional to the amount of people or amount of stake that's staked. So that it actually does not factor into the total amount that any individual person gets. So that APR is constant as a function of more or less stake.
I think this is another good follow-up question. How can one company offer more of an APR than another?
Yeah. So that goes back to a little bit of like the optimizations that a validator can make. So the ones that I described earlier were hardware optimizations, basically reducing bottlenecks. So I can make sure that my validator votes, doesn't miss a voting opportunity because I'm busy writing something to a file, for example. But there's other ways to improve it, and those are like software optimizations, and that's like Shinobi and Leapfrog and a couple others have been able to dedicate a lot of time towards, is really thinking about why is a vote not landing? Why does a vote get missed on a valid block? Some of it, and it's basically writing software to plan better or to vote better, or like, hey, let's hold off on writing these logs until we've made sure our vote lands. Like, that's quite simplified, but like those kinds of things can happen. So the people who take more time to optimize their hardware, to optimize their software, can offer better rewards. But there's other ways people can distinguish themselves, and that, like, for example, like what I do is I try to be active. I try to be helpful to people, and just try to get my name out there. But also kind of things like the the NFT program I have, just like a little gift here and there, just something to sort of entice or to encourage people to vote for a smaller, or to put their votes into a smaller validator. But yeah, I mean, like, I think it's reasonable to put money to someone like Shinobi. I like to spread them out. So when I staked, I had done some with Shinobi, some with Lane, which is another good one, and some with Leapfrog.
Okay. It's funny. The only reason I didn't do it through one of the other bigger ones is because I thought that commission came off the top of the APR. I'm like, why would I get 5% when I could get 6.5 with Cogent on another company? Let's move along. Johnny Berber is joining us from London. Hey, Johnny, thanks for coming on the screen. He said, do you have to hold Solana long-term to potentially make life-changing money?
So that's even more speculation on a speculative asset. I would say you don't have to. No, you don't have to. It's hard to say. I mean, like, imagine if you'd put in $10,000 a year and a half ago, we have well over 100x increase. So no, but it's still risk, right? Like, so you're taking on that risk for because at that time nobody was using Solana. So you were not only hoping, hey, the technology will work out, it doesn't have any bugs, people will end up liking it, and they'll end up liking it a lot, and it will scale. Like, right, like you had to, all of those things had to go right for that to be a right call. And anyone who did that, like that worked well, and that's why everyone's like, wow, these gains are crazy. But what you didn't read about, I think there's like 15,000 coins on CoinGecko. Most coins, most tokens, most networks do not 1,000, 10,000, 100,000x or percent increase in a year or two. So yes, it's possible to make life-changing money. on Sol in less than a year, life changing. I think a 10x is possible in a year. I wouldn't claim. I certainly wouldn't be a YouTuber who says Solana will be $800 next year, but it's not impossible. Like that is possible. It's just if you're depending on the money and you have to sell it in a year, it could also be down half.
Mm-hmm.
You or I or nobody knows for sure where it'll go.
Yeah.
So yeah, you can make life changing money, but you can lose
You
that
could
amount of
lose
time
all
too.
your money. So yeah, if you don't only invest what you don't need, what you can afford to lose, basically. Paul New is here. Paul says, "What would happen if countries brought their own digital money and banned cryptocurrency? Is that possible that they could actually ban it?"
So it's like you kind of think of what does a ban mean, right? So if you're a country and you ban your citizens from interacting, there's enforcement. And it can be hard to enforce. It's not impossible, right? Like there's when you sign up for like a Coinbase account, you typically if your government requires it, U.S. government does, and I'm sure the UK government does, and I think every European country does. You do what's called KYC, know your customer, and for them to sort of take in fiat currency and give out cryptocurrencies, they know who you are. They have to know who you are, or they won't let you buy. They won't let you make that exchange. So they could ban the off and on ramp of that nation's currency on those platforms. But there's not much or nothing, at least technically preventing you from, like, let's say you can Venmo somebody a certain amount of dollars and they send you the crypto. Maybe an investigation could be done and they could find out, but there's nothing technologically preventing you from participating in the networks, regardless of whether it gets banned or not. But then all of a sudden, now you're taking on not only financial risk, you're taking on legal risk. Maybe worth it, maybe not. It depends on how well you think those KYCs are set up or how you acquire your cryptocurrencies. It is possible to do, but I think, like legal risk is real. That's jail kind of stuff or whatever the fines or penalties are. So it's that's up for the individual to make the call. I personally will be always trying to stay on the right side of the law because I don't want to worry about legal risk. So if it got banned in the U.S., I do not think that will happen. But if it did, yeah, I think my journey in crypto would probably be over.
Yeah, I get asked this a lot too, Ben, and I just don't think it's very probable that crypto gets banned because all the governments care about is taxation and money laundering. So if the KYC is in place, they can get a hold of the money laundering side and tax crypto. I think they would be very happy
Yeah,
to do
and
that.
the open ledger is makes it way harder to sock away money in secret. It's just open. It may be anonymous, but it is public. And as soon as you attach a name to a wallet, well, you can trace every transaction that's ever happened and basically trace it back to, well, the source of the funds. And so governments actually do like it. Now they can't control it. They can't control the monetary policy. So from that perspective, it's risky for the governments. But there's also just the technological, like if imagine if you banned the internet early on, you would have missed out on an economy boost unlike we've ever seen in human history, bar none. Do you really want to be the country that handicaps your entire economy, that handicaps the people, like people like me who want to engage and make money, make companies in this space? Do you want that to move overseas, or do you want U.S. persons or European persons or UK people? Like if you're their government, do you want to participate in technology or not? And I think for the most part, governments don't want to give a technology win to their adversaries or even their allies. So
Hmm.
I think there's an incentive not to ban. There will be things where they'll try to control the monetary policy things real. Printing money is harder when you can't. What I mean? Like, so we'll see. That'll be a balance, but I'm actually looking forward to increased regulation just because people at that institutional level, people who will abide by the law because they have so much to the T. It's not clear how to legally own and hold crypto at that super high scrutiny level. And so a lot of people just avoid the headache because of the uncertainty. So I actually think crypto will be more valuable, will be more interesting if we can regulate it effectively. Hopefully with common sense regulations where we're not banning things, but just making it clear what are the rules will actually increase adoption, not decrease it, in my opinion.
Mm-hmm. And Richard McDougall, that's a very, very good, I want to say Scottish name, but hopefully it's not Irish. Richard said he came across POSI on the Bybit exchange, staking for 14 days at 100%. And he's seen some other staking options which are paying crazy interest rates of 500%. So I wanted to say, yes, there are options out there like that within the staking world, but just be aware, and you know this from peer-to-peer fund, peer-to-peer lending, if the interest rates are sky high, there's usually a reason for that. All kinds of different factors go into that. The risk is very, very high, and plus you're getting paid out in the coin that you're staking most of the time. So, you know, there's all kinds of inflationary things to do with that. So just be very, very careful if you're looking to delve into staking, and there is different risk levels that you could take. I think Solana is one of the, I consider, low risk staking options. Obviously, you can stake Bitcoin and things like that too. You're not going to get these crazy interest returns, but there's a reason for that. So just be aware, right, Ben? Yeah, we don't want anybody to get burned out there, and there's plenty. There's actually also a lot of scams too that will. We talked about this last week. They'll say, send us an Ethereum, we'll send you 2 back. Just, it's all a scam, so don't do it.
Yeah, well, especially the I send you one, you send me 2. Like, yeah, that's clearly a scam. So something to consider too is like when you see those really high APYs, if it's inflation powered, then like that's not money you're getting, right? Like at the same rate that you're getting 500%, the overall supply is going up by that much. And what happens is that you'll see price decreases. So like you know that typically create sell pressures, and that's how a company or a coin sort of starts off kind of with excitement and then just plummets in value over time that even outruns that APY. It's played over and over and over again. It's the reason why you won't see a you know, like fiat money ever at that percentage, because it's just not sustainable. It's not a way that can actually keep a value constant. So I would be very cautious of things with high APYs. Especially with like coins who has high staking APYs. It's not guaranteed to be a scam, but it's, you know, it's a signal that maybe you should watch out.
Watch out, buyer beware. So listen, there you have it. We've gone way over an hour, like I do. Again, if you want to check more into just Solana in general, I've put all the links in the description. You got Cogent's website. He even has an article about how to become a validator. So this is all about the power of the network, and you know, everybody who is a network validator does it in growing the network itself because they really believe in Solana as a cryptocurrency. Yeah, so again, thank you very much, Ben, for taking the time to do this, and hopefully I'd love to have you back on in the future where we can do an update with Cogent and see what's going on with you. Anything else you want to say?
No, I think that pretty much covers it. Also, you know, I did also write some articles on staking and DeFi, so people are welcome to check that out. They're both on Medium. I think on my website I have a link to that validated article you're talking about, so you can get it from there. But you could also just look up Cogent Crypto on Medium and see my articles about staking. I think I go into pretty good detail, maybe a bit of a rehash of what we talked about here, but if you wanted to sort of review and go through that in sort of a written format, that's all there.
Yeah, if you go to Cogent's website, it's up here on the right. It says Becoming a Validator. That will take you to the Medium article, and yeah, you can check that out. So great. Well, thank you so much, Ben. Located again in Colorado, in Boulder, Colorado, in the beautiful mountains and the Rocky Mountains. Lots of great things to do out there. But thank you so much, and really appreciate it. And hopefully we'll do this again.
Yeah, it's great. It was great chatting with you, Lawrence. I really appreciate you inviting me and meeting some of your listeners. So I appreciate that.
Okay, all right. Well, thank you, Ben. We are going to call it a night. I'm going to hang up the call. I will speak to you soon, and appreciate you, Ben.
All right, bye.
Okay, all right. Take care. So there you have it, everybody. Ben from Cogent. I hope you got something out of that. I hope it was valuable. I think personally, staking is a great way to really get some returns on your cryptocurrency. But again, we will be back on Thursday. Shojan Property Partners, Jatin will be here, so don't miss that. And yeah, that's really it. We'll see you on Thursday at 7:30 p.m. UK time, 2:30 p.m. US Eastern time. Have a great couple of days. I'll see you then. Take care. Bye.